Hello, everybody. I'm Bonnie Halpern. I write the weekly startup onestep.com newsletter. I'll put the link in the chat. And every other week we have a guest. Today it's Pano Anthos from XRC, who gives us insights as an investor, as an industry specialist, and we call them our online insights. I want to thank you. And we also work with founders on their pitch decks because, as we know and as Pano well knows, they don't know how to write them. They don't know how to present them. Everybody falls in love with the bricks or the product, and they don't understand what investors are looking for. But maybe Pano can get into that too. I want to thank Joseph Katz for hosting us. Joseph, tell us about you.
Thank you, Bonnie. Good morning, everyone. Thanks for joining. My name is Joseph Katz. I am a results-driven marketer who's worked in both corporate America and early-stage tech. I've seen the good, the bad, and the ugly in marketing, and I help companies go from unknown to well-known with a focus on growth marketing, and go-to-market strategy. So please put your information in the chat. I'll do the same. We'll keep the intros short. So thanks for joining, everyone, and excited for today's conversation.
So, Pano, every time we either go around and have the attendees introduce themselves, or you can introduce yourself and talk about the funds, I should say, and the accelerator. And then we can have them introduce themselves, and then we open it to Q&A, but it's up to you.
I can follow your lead however you want to do it. I like to hear everyone's intros, but, sequencing is up to you.
No, I think that's a good idea, because then you know who you're talking to. So, Ian, take it away.
Okay, good morning, everybody. Ian Garmes. I'm in Toronto. I'm the COO of the Virtual Film School based in LA. We provide live online instruction for content creators. And we're currently doing business in about 5 countries. So things are going pretty well.
That's right. I forgot to tell you that since we've gone online, Pano, we've become quite international. In fact, next, Dr. Daniel Sanders, take it away and tell. Speaking of international.
So good morning to everybody here. It's the afternoon. I'm in Israel, and we are. I'm CEO and founder of Ultra Oral. It's a company that we're developing breakthrough intraoral tissue platforms for OTC nutritional supplements and drugs to lead the future of healthcare and wellness.
Oh, thank you. Janice.
Good morning, everyone. It's nice to be back. I'm Janice Shoker. I'm the founder and CEO of Telsey Brands, which is a modular support pillow for head, neck, and back supports that's been in the healthcare industry. I just opened up this year the travel industry. And I'm also working with a coalition of other small products to I'm calling it cooperative collaboration, where and capitalism, where we actually are working together to further our marketing dollars. So it's a new concept, and we're going into tech with this. So I'm happy to be back. It's been a while.
And welcome back.
Thank you.
I know Andrea is on the call. I don't know if she can introduce herself. Nope, she can't. Okay. It's Carol.
Hi, I'm Carol Donahue. I'm also in Toronto. I'm a data scientist. I work with businesses with data analytics and predictive modeling. And specifically for in the startup space, I do advisory for integration of generative AI into product.
Smile when you say generative AI. Craig. But that's my personal bugaboo.
Good morning, Joseph and Bonnie. Thank you, as always, for hosting us. Craig Isaac checking in, as you see behind me with the Chase logo. Joined Chase Business Banking recently. I work out of the West LA region in Los Angeles, focused in Beverly Hills, lifting small businesses and aspiring to be able to support founders and bring my experience in specialty banking. And as Bonnie knows, my real passion is AI art. So hoping and aspiring that will take off soon. So thank you all. And as you know, I'm in LA and I'll be running out to run. So if you see me sneak out, please don't take it personal.
All right. Yeah, we're happy that you joined us, and it's so early in the morning out there. Donovan.
Good morning, John Donovan, so founder of PeerTree, which is a private learning community service or learning communities as a service. Work with large organizations and small with large audiences. 25 years applied learning science. Helped commercialize a book called How People Learn Brain Mind Experience in School, published by the National Academy of Sciences, and had clients all over the world and decided to do it cheaper, faster, and better for small businesses.
Oh, good for you. Thank you. Patrick.
Hi, good morning. Patrick Fraley, lower middle market investment banker by trade, but love working with startups and founders. Actually in New York and have spent a ton of time at Tech Week. It's been awesome. There's so much excitement and just a ton of great vibes out there. So look forward to chatting with everyone today.
Oh, thank you. Yeah, I've been hearing mixed reactions about Tech Week, but thank you for your input. Ryan Hurd, the smart guy.
Good morning, Bonnie and Joseph. How are you doing? I see my friend Janice is on the call too. How are you, Janice? My name is Ryan Hurd. I'm the founder of Caregiver Smart Solutions. We deliver unmatched peace of mind instantly by offering a simple and effective monitoring platform for family caregivers who are overseeing loved ones that are aging in place.
I will also mention that he's also the mayor of his town.
Yes.
Scott. Oh, are you muted, Scott? Oh, he's muted. Oh, he stepped away for now. We'll come back to him, and I will tell you that Andrea is a recovering lawyer and she sits in investor through family office. So Scott will be here. He comes. Scott, you want to introduce yourself?
Oh yeah, sorry, I just had the Terminator was just here. Seem to get ants every spring. So I'm Scott Purdy with Sine. I'm CFO and one of the founders. I'm also a part-time actor. And with our product, we have a product in case there's anybody there's a few people here I may not have seen before, and some people like Andrea is at every event I've ever been to. But our product will allow you to multiple uploads of videos from anywhere in the country. And it will go up, and our product will create a professional video or movie just in a very short time. We're hoping to be developing the AI portion so that we can allow you to give instructions, like if you want to make something in a certain style or certain angles or whatever, that'll allow you to do it. Right now, we're probably in a seed or angel round. Our product seems to be working pretty good right now, so we would just like to get a little bit of input just so we can do some of the programming. And that's it. I love coming to these meetings, and it's great seeing everybody. Oh, I'm located just outside of Philly in South Jersey, exit 3 to New Jersey Turnpike.
You're up at exit 9, baby. Pano, take it away.
Okay, Bonnie, thank you. So my name is Pano Anthos. I started XRC in 2000, late 15, early 16. I'm a multi-time founder of startups in logistics, in deep tech, and then gaming. 2 successes, 1 failure. The last one was a pretty devastating gaming wipeout, despite all kinds of accolades and awards from TechCrunch and investors throwing money at me. I was actually the first commercial customer for Unity, the game engine, back in 2006. And the irony is I had an opportunity I bought the source code for $50,000. I could only use it with a certain limited use case, but I still owned it. And I talked to my board and I said, I can probably get stock in the company. This is 2006. And the board said, why on earth, you're a startup, why on earth would you take equity in another startup? So anything I say today, you please take with a massive grain of salt, because, you can get the smartest people in the room. I am not one of them. And they will come out with, if there's 10 people, there'll be 10 wrong answers. This is a very unpredictable environment and world, and it's very hard to be accurate. The other thing I'll say is there's an anecdote. Don't take this from a religious context, but more from the vantage point of numbers. So there was a itinerant preacher. This is a true story. Itinerant preacher who was traveling through the South, and he shows up at this tent meeting. This is back in the 20s, I think. And there are 2 people in the entire audience. It's probably shares for 100, and there are 2. And this itinerary preacher is just beyond depressed. He says to himself, I am clearly a failure. I am wasting my time. Why am I doing this? I've got no turnout. But it turns out one of those two people in the room was Billy Graham, who became a believer through this man's preaching and then turned out to have this enormous effect on the rest of the world. The story being basically, it's not a large numbers here. We have a small gathering. It's perfectly fine. Hopefully what I say or do will be meaningful to you in some capacity, and you'll go on to do much bigger and greater things than I would ever do. So I take that with the context of true humility to say no one can ever predict the future. But let's have a whack at it, so to speak. So I started a multi-strat venture fund called XRC Ventures. Used to be called XRC Labs, but we got confused with diagnostics solutions when we got into healthcare in 2016, predicated on something that I'd seen in the industry. First of all, my wife tipped me off to the problem, which is she went back to retail after many, many years. And she didn't want to work hard anymore. She had run Sesame Street's entire product business back in the day. And she was just like, I just want to check in, check out, and have a little fun. So she takes over this retail store in Wellesley, Massachusetts, where we were living. And after the first day, I asked her, "How are you okay? You haven't worked in years. Raising a family, nothing wrong with that. And also, you haven't run in a retail store in forever. So she said, well, nothing's changed. I said, wait a minute, that's close to 30 years of history here. In technology, you can't imagine 5 minutes without change happening. And to be out of an industry for 30 years and then show up and as if nothing's changed, it tells you how backward the industry had been and still kind of is. So we saw that, plus the fact that Target was using Amazon as an e-commerce platform, even in 2015. Think about that for a moment. Talk about cat in the hen house. Another data point that really kind of prompted me was the Target CEO was interviewed because Amazon had just come out with their shopping app back in 2012. And I used it at a Bed Bath & Beyond, and I saved, I don't know, $80 on a toothbrush. Right now, you have to understand today, it's like, oh, of course. But back then, the idea of showrooming and the ability to scan a product and just automatically buy it and have it shipped in 2 days on a mobile phone was still in 2012 remarkable. So I mentioned this to a clear capability, a person, a consultant who was meeting with the Target CEO, and he said, the Target CEO says, we're going to fix this. We're going to change all the barcodes on all our products and make them unique so that Amazon can't scan for our products. And it was actually in the Wall Street Journal, his interview. And I just said, this guy's an idiot. So the combination of, idiots running the companies, not taking Amazon seriously, the business hadn't changed in 30 years. I just knew that there was a huge opportunity for a disruptive situation to exist. And so we decided, no, I didn't want to consult. So I just raised some capital for some friends, 300, I think the first one was 300,000. It was ridiculously small. Put a bunch of some money to work, $50,000 per startup, and just got started. So we've raised since then about 55 million, invested in 140 companies across, 15, 20 countries, and have got exits to show for it. Both in our focus now, as we've refined it, used to be retail, but it's not. It's really the intersection of consumer behavior and it changes in technology. And that gives us license to hunt in the technology space. It also gives us license to hunt in the consumer brand space, but differently. But most importantly, we really focus on the activity of the consumer and what they're doing. So we got into healthcare, not because we were healthcare experts, but because the consumer wallet was more and more shifting to healthcare related activities. So we've got some great success in that industry, what we call the consumerization of healthcare. Things we don't do payroll systems, we don't do ERP systems, we don't do traditional, SaaS platforms that take a ton of time to integrate and build into a corporate environment. And the other side of the coin is we don't do anything that requires FDA level 2 certification. That's just too complicated and hard. Too much money required, too much clinicals needed out of that. It's just not our world. That's kind of we have a team of 12. We have 7 or 8 corporates who write fairly large checks to us to work with us in a collaborative startup ecosystem, both in terms of our insights as well as collaborative investing. I can't share too much about that. I'm under NDA, which usually the corporate, so I can't even mention them. But nonetheless, they're all publicly traded, and they have a market cap of over 200 billion. So we're pretty happy with that. We probably have 2 or 3 more joining, anywhere between $1 billion and 12 billion in sales. If you get much larger than that, they tend to do their own thing. They think they're important. Anyway, so that's kind of the story. And Bonnie, I'm happy to just take Q&A from here on out, or however you want to run things.
Sorry, thank you for that. Yes, anybody have any questions? I have one, considering, people who've been introducing themselves, and I know that investors are like, AI has become the new aphrodisiac among investors, and I don't buy it. I at the beginning when OpenAI came out, and I know Sam and his background, I'm like, this guy's dark, this guy's evil. Now the press is starting to report on this. So my question is, how important is some form of AI to investment?
I'm sorry, there's some background noise. Could you repeat that, Bonnie?
Oh yeah, would you guys? How critical is an AI component to your investments these days?
So actually, I wrote a paper and posted it that AI is following the history of water. You can't live without water, but water was a very disaggregated, dislocated, hard to find, hard to capture property. And if you follow the history of water, from the Roman aqueducts, and I'm not going to give you a whole history lesson, don't worry, but where the US got involved with water in a different capacity was building water systems started in the 1680s in Boston. They started thinking about water for urban environments as a system that had to be built. But what happened is water actually became the worst purveyor of disease, ironically enough, and cholera, because it wasn't regulated. And so what was happening is water was mixing with feces and everything else, and people were drinking it and dying or getting very sick. AI is following a similar trajectory. We had this very disaggregated, we've been investing in AI since 2015. So this is not a new phenomenon, but I would say it was very disaggregated. It'd be AI over here, some AI over here. No one knew what it was. No one saw the impact of it. Yes, Chicago as well. Correct, Ian. Thank you. And what's happened now is when there's been a coalescence and a fervor, much like there was a fervor to build water systems, kind of aqueducts, or not even sewers, but just mechanisms for people to get water without regulation. And that's what we got right now. We got the Wild West out there right now. And what I get most concerned about is actually not corporate malfeasance with AI, which of course exists, but I'm a parent, my kids are older, so I don't really suffer from this. But if you have teenagers, the concern around fake imagery and generative AI being used for evil purposes, if you will, and I use the word evil loosely, I don't mean it really like in a heinous way, but just nasty, is actually a big concern, and has become a big issue. So the cat is out of the bag. I believe AI is essential, but it's like water. It's going to be as commoditized as water at the end of the day. You will not build an application without it. You will not invest in an application without it. It won't even be a topic of discussion. We don't discuss water. We drink it. We assume it's coming out of the tap. New York City tap water is the best, among others. And I can tell you a whole story about water filtration systems that we invested in. It was hysterical. But nonetheless, water is foundational, essential. You can't live without it, but you don't pay a premium for it. And honestly, that's where AI is going to be in short order. The people who will make the money for a while are the producers, the real, the OpenAIs, the Perplexity. I think Perplexity has a shot as a search engine to disrupt Google. Google will probably have to buy it at some point. But by and large, it's Microsoft, it's Google, and again, this is nothing too new to you all, but I'm signed up for it's got to be in everything, but there's no premium for it. I'm not going to pay you extra because you got .ai in your title.
Oh, could you give us a link to that article you wrote? I'd love to read it.
Oh, sure, I'll get it to you. Yeah, I can. I'll make a note to do that. I'll just keep some notes on the side here if you don't mind. I'll just do that.
Yeah, thank you. That's I love, especially when it includes history. I am a history buff. Questions? I'm sorry.
Well, actually, I got a question. So panels, what do you think are the most exciting sectors for you right now? The ones that are really showing promise that you really want to get more into?
So that's a very, very good question, because I'd say we're in a lull of sorts, right? I don't think it's been clear where AI is going to create breakout solutions that are really financially, successful. We have a lot of investment going into AI because it's AI. The areas that I think are going to, but nonetheless, we have 4 areas we invest in. And they're broader categories within this kind of intersection of consumer behavior and technology. One is what we call commerce enablement. Faster, better, cheaper is never going to go away. People pay for speed, people pay for convenience. So you're always going to see a turn of the crank on the whole commerce platform. Supply chains are going to get more efficient. Manufacturing is going to come back to the US. We've invested in that. You're going to see more on-demand solutions coming forward, as if you think about you had to wait to buy a Tesla for 6 months, people were willing to do that. The ability to kind of get what you want is going to shorten in time over time. We have a shoe company called Hilos, who's just on Bloomberg. They've shortened the lead time to produce a pair of shoes from 24 months, which is really the case, 24, 36 months, to less than 4 weeks. So when you start to collapse manufacturing times, you open up new customization and personalization options, as well as reduce inventory costs. So we're big fans of, and have been for some time. The second area that we're always tracking, but it's hard to invest against, is new distribution channels. I mean, TikTok's the best example. First it was Facebook, then it was Instagram, then it's TikTok, and it's going to be something else in 3 years. The trouble is they have an arc and a history that tend to flatten over time. You look at Wish. Wish had a big kind of track record and failure. And you see these, jump out into space, so to speak, and generate all this interest with this faster, cheaper, better story. But at the end of the day, they fall apart. So actually, it's going to happen to TikTok over time. Everyone's going to produce the algorithm. We're all going to be trained to swipe if we're not already. And our kids are going to move from TikTok to something else because all the parents are on TikTok. It's just inevitable. Sorry?
I was just laughing. It's true.
Oh, yeah. No, it's true. It's just that, you've been around the block enough. So you've seen it all before. It's just another iterative process. And so what we do believe is going to be important here in this area is going to be streamlined checkout. We'd all like to be able to blink and buy it. That's not possible today, despite what Elon's trying to do. But the checkout process itself is really painful. E-commerce applications are painful. They're very old and outdated. So I think there's huge opportunities to streamline that. We've invested in some things that we think are actually got a shot, but it's a long shot. The other area is sustainable commerce. So the big challenge in sustainability is hopefully you already know this, is if you try to invest in sustainability for sustainability's sake, consumers don't care. None of you are going to pay more for a pair of shoes that are ugly, but it's sustainable. Look what's happened to Allbirds. I mean, at the end of the day, those shoes did not really last. They were not very attractive, and they didn't come up with plan B, C, D, E, and F. So they're basically out of business. So sustainable commerce really is about integrating sustainability into the everyday warp and woof of the business. So an area that we're investing in right now is rental. We believe that the macroeconomic trends, which are bifurcating our population, I've been preaching about this for since 15, that you're seeing a barbell effect in the population. The rich are getting richer, the poor are getting poorer. All the tax laws advantage the rich. The poor basically are income-driven tax as opposed to capital efficient and capital-driven. So that barbell effect is reducing purchasing power. It's a reason why, and I'm not going to be political here, but it's a reason why there's so much anger about the economy today, even though the top line looks great because the Dow's up, S&P 500 is up, and all these companies are generating all these profits. Is that I have a house in South Carolina in the backwaters of near Augusta, Georgia, and it's a very different experience when you talk to people who basically have seen their grocery prices go up by 50%, 60%, and their income hasn't. So immediately you've just lost a ton of purchasing power and you've developed a lot of anger. So all I'm saying is that rental becomes a potential relief valve for those folks who can't buy furniture, they can't buy kitchen equipment, they can't buy a car. I mean, the reality is a lease is a form of a rental, if you will. And you're going to see, Home Depot has a big tools business. It's about $1 billion. The challenge for retailers, why this hasn't taken off is, and it's a real issue. It's just like it was with e-commerce and retail back in 97, 98, was that the minute you distribute on a rental model instead of a sale model, you reduce your immediate P&L, right? Your P is dropped dramatically because you require 10 or 11 trips of that product before you actually make the money that you want and need. So the willingness to forego short-term gains for long-term results, Wall Street doesn't really like it. And so therefore the CFOs of these large retailers are not willing to apportion out some of their inventory for rental businesses, even though rental in some markets has been wildly successful. As I mentioned, Home Depot has a big business in that. So rental's big. And then lastly, healthcare. I mean, we've got 3 or 4 healthcare companies that are doing phenomenally well. And they're in the consumerization of healthcare. So it's really not mobile apps. I don't really believe that those are long-term plays, but it's this ability to kind of take the doctor's office and move it to your home. So we see the same trajectory in the medical field today that happened in e-commerce and retail 20 years ago, which was the store, which was the equivalent of the doctor's office, right? Got disenfranchised, disintermediated with these e-commerce online solutions that you could do from home. And the convenience of that has been well understood and powerful. The doctor's office has been this fortress by which you couldn't do anything if you didn't show up to a doctor's office pre-COVID. Now, because COVID and also relaxing the regulations, we actually have a company that's literally delivering fully medically certified, et cetera, Accutane. So Accutane is one of the most dangerous drugs to take, especially if a woman's pregnant, or there's all kinds of issues with it. So there's really strict guidelines between the intake, the forms you have to fill out, the care you've got to provide. It's really exhaustive. We have a startup that, and 2 startups behind it that are supporting it, that literally are able to deliver Accutane online successfully, clinically supported, medically certifiable, and has been a huge relief valve for these teenagers who live in states where there's 1 dermatologist or 2 in the entire state. And I'm making this up a little bit, but dermatologists are very hard to find and very tough to get onto their calendars with. And if you're a teenager and you're going through puberty and you've got this massive acne problem, which a lot of teenagers have, and it's only gotten worse with our food supply, the need for something like Accutane is greater than ever, and it's very time sensitive. So it becomes this company has an LTV of $3,000 and a cost of acquisition of $50, just to give you some sense of the magnitude. They're highly profitable. They don't have to raise any money. It's a huge need in the market. Is it a billion-dollar business? Accutane's not a billion-dollar kind of situation. Anyway, so I'm sorry for talking so long. I'm happy to step back now.
That was a great overview. I just have one quick follow-up. You mentioned rentals. Are you familiar with this company called Pad Split in Atlanta?
No.
Pad Split. They take private homes and they divide them up into rental areas.
Oh, wow.
And in a kind of an organized way, they manage the finance, they manage the renovations, etc. They got about 50,000 rentals now in the US, five major markets.
Wow.
And I'm looking at that because, the situation in Canada where I live is even worse in many respects in terms of rentals. Like the cost of an apartment in Toronto on the average is now higher than New York City, which is saying something.
Crazy.
Right? So it's a crazy situation, and the government has no good response to it. So it seems like these solutions need to come from the private sector, as far as I can tell.
Yeah, I'm a big fan, and it's got a sustainable story to it as well. So the beauty of rentals is that it's economically very viable value proposition for the consumer. It's actually a very viable proposition for the landlord or the owner of the material, as long as they take a long-term view. Because you can get 10 or 12 trips out of a product and make a ton more money than you could have just selling it. And then third piece is it actually reduces the amount of product that's going to get thrown away.
Right.
So it's just a different, and rent the runway, which was a kind of a starter to this. Apparel is, has limited use cases. You're not going to do a whole bunch of apparel on a rental basis. And you're certainly not going to rent shoes, like in the traditional sense of the word. You might buy used, but anyway, so yeah, I don't mean to bore you, but yes, we think there's a lot of play there.
Oh, cool. Thank you very much. Yeah.
It was just rent the runway, but that was different because it's gowns and a tie-in. You're talking about the food supply, and
Bonnie,
yes.
Bonnie, I have a question if I could ask.
Oh, sure, go ahead.
Yeah, so we're developing OTC health and wellness products based on functional chewing gums that increase bioavailability of nutritional supplements to your body. And I just would like to get your opinion on whether it's better for us to focus on B2B channels or D2C channels when we want to go to the market.
So we actually work with a number of corporates. We came very close to investing in Neuro. If you know Neuro, which has caffeine in the gum.
Yes, yes, I do know very well.
We actually had a corporate who wanted to buy them when they got to a certain size. The chewing gum market is a very interesting space. It hasn't really been innovated in years, and yet your mouth is your reflexology. It's kind of your apex of your microbiome, right? So measuring, testing, delivering gets very interesting. We've spent a bunch of time in that category. I think there's a play for you. What we always recommend is prove that your product works. The easiest way to do that is D2C. It's actually hard on some respects, but it's easy because there's really no barriers to you, right? You can put up a website tomorrow, you can check out, blah, 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 you can sell stuff. Marketing, to Joseph's credit, marketing is hard in D2C. It's actually gotten harder and more expensive. But if you can prove it in D2C, you can prove it in retail. And retail always uses online first as their measurement tool. They almost never, ever take a product right to retail. It's very dangerous because you got inventory, you got all kinds of costs and effort and labor. So they really want to see it. Even Ulta, Sephora, they will put products on their website first, and then they'll consider bringing it to retail. So for you, and I think there's actually, I'd love to hear more about your product because I've got corporates I think who would be interested in this. The question is going to be twofold. One is, what's the IP around this? And you don't have to tell me today, but everyone in consumer brands, defensibility, it's brand or defensibility, right? So you've got something you've got in your technology that keeps it unique and protected. Great. It's very unusual for that to happen in a consumer brand. It's more likely that they've built a brand story behind some differentiation in their solution. So think of Supergoop and sun care, there's just tons of examples of this. And they gotten a lead and built a brand around it and then launched and got big because of that, not because of the inherent differentiation of the product, but because people associate it with value of some kind. So 10 years ago, the big push was toward organic ingredients, and getting all the crap out of the materials. Today, gotten much more complicated. Corporate brands are looking for some sort of IP differentiation because they realize that anyone can build a brand or anyone can destroy a brand overnight. And then you got the Kardashians out there who just are celebrities beyond all measure and have an ability to move markets and mountains because of their sheer influencer size. Most corporates are not interested in influencers, by the way, just as an FYI, because they know that their rise and fall is very predictable. So anyway, so that I'd love to hear more on that one because I do think the microbiome and the mouth are really, really interesting channels for our health and wellness. And it gets back to the food supply a little bit too.
Yeah, well, thank you very much. Yeah, to follow up on that, because I was thinking maybe to go through professionals first, like through dentists, through functional nutritional doctors. Not worth it.
Too much work. No, I think you'd have to build a sales force. You've got long lead times. I think you should see if in fact there's any consumer interest in the product. It's really easy to test this.
Okay.
We can talk offline, but yeah, I think there's lots of ways to figure out whether you got a viable product and whether it's product market fit. I mean, that's the beauty of online, is it doesn't take long for you to figure out. Statistical relevance is 150 sample size. You get 150 people buying your product, and if they buy it again, and by the way, the most important thing in consumer brands is repurchase.
Right.
By far, it's repurchase rates. And so you need some history, even though if you get an initial slug of orders, it's, are they buying it? Are they using it every day? And what's their consumable purchase pattern?
Okay, sure. I'd be happy to send you something on it to get your
please.
details. Thank you.
Yeah, absolutely.
So next.
Hannah, I have a question for you. I really appreciate this. What I'm curious about and what I'm venturing into is, you talked about the rental market for Home Depot, and that's actually fascinated me. But I'm looking, what do you think about subscription boxes? Do you think that that's something? Okay.
DOA. I mean, everyone has
great.
tried it. There hasn't been a single one that succeeded. I mean, everything has failed. Everything, even public companies have basically given up on it, because you just get tired of that box. The human pattern of behavior. This is why we focus on consumer behavior. Is sure, it'd be wonderful to open up a box every month, but to buy something every month, I don't buy clothing every month. Do you buy clothing every month? Do you buy anything? What you do is you consume stuff. So just talking earlier, it's the consumables is what it really matters, which is what's your repurchase rate because of what you've consumed. Now you're in a tough category. I was actually on the board of Purple, the mattress company.
Mm-hmm.
Okay. You're a one and done. Maybe you buy 2 pillows, maybe 3, but you don't buy pillows every month, every year, every quarter, right? So you've got the reverse problem. And I don't say this in the wrong way, which is you have to have a lot of individual purchasers of your product as opposed to a small cohort of people who buy your product all the time. And so,
it's true.
Go ahead.
Yeah.
It's a huge challenge in the.
I have 25% repeat customers because it's a pillowcase. So that's and it has IP, so it has a different a multi-use application. So that's helpful. But again, it's, as you know, I'm too small to combat the marketing, which is why I'm trying to go in back doors of different places and link arms with other in the healthcare industry is really where I'm making my most repeat sales. So people recovering from medical situations in hospitals and nursing homes, and then they take that to travel, which is what the consumer demanded to create a travel, smaller travel product. So that's been helpful, but just really trying to crack the nut of getting through the noise in the caregiving space has been, I think, more challenging, which is why, getting creative. So thank you about the subscription boxes. So the people I'm working with kind of thought that was an idea. So I'm going to go back and say, no.
Well, it's just, again, how many pillowcases do they need? And then you got to be a marketplace for all these other sleep products, which, there are other putting up a marketplace is not hard. It just takes a lot of marketing.
Right.
And you got to be, I would argue more and more what really matters, and I think AI is having a huge impact in this, across the board, whether it's a technical product or consumer product, it's getting really ridiculously cheap to make stuff. It's getting ridiculously hard to sell stuff. So where is the value add? It's in selling stuff, not in making it. So there's a billion ideas every day. You've got an idea. It seems like a good one. But until you get customers, until you show that there's demand for your product, making it is never the problem. So it's really, all the founders we're looking for now are first and foremost great communicators of the messaging and the value proposition of what they were building. And secondly, they can sell. You are going to have to sell to these B2B, nursing homes or whatever. Like, it's just not going to, people just don't write orders automatically anymore. There's just volumes of stuff out there. So you have to cut through the noise, which makes you critical to be the best marketer and sales executive if you will, in your company for the first $1 million to $2 million in sales before you can bring anyone else on. You got to do your own ad development. No offense to you, Joseph, but third parties are great, but the challenge with third parties is they don't have your voice until you get much larger and they can afford the time and effort. But my favorite story is there's a brand called Thesis, which is now doing over 50 million in revenue, brain supplements. And when they came to us in the accelerator, they were doing $2,000 a month in revenue. Like, that is really atrocious, right? And they got our check for whatever, 100,000, whatever it was. And they immediately decided to go hire an agency. And I was like, oh, I don't like this. It's not good. And the CEO felt like he needed to delegate the capabilities to this agency, but the agency never had his voice, never had his story personalized in such a way that would come across as an evangelist. Because right now you have to be an evangelist. No one is just buying your product because, oh, I've been looking for that. There's no awareness at all that there's ever a need for this, right? So you've got to be the best evangelist on the planet. Now, whether you write your own ads or not, but what happened was Thesis was doing so badly, I basically told the CEO, you're not a CEO. You're acting like a product development person. You're not building your business. So either you step down or you step up. He fired the agency. He took responsibility for his own ad work. And within 3 months, he was doing $10,000 a month. And now he's off to the races and has raised, great deals of money. But you have to own. You can use a third party, and I have nothing against that, but you have to own your brand voice, whether you're selling or marketing. So I don't mean to product development, it's just not hard anymore. And AI is generating code like crazy. I mean, generating code is not the problem. It used to be, oh, I'm not technical. I need an engineer to do this. Now, basically, you can build entire prototypes with just some voice commands. Now, it may not be the actual final product, but it's enough to showcase the product to a third party. And I saw someone's doing customer-funded development, and it's exactly what you do. You walk in with the prototype and you say, I can do this. Do you want this? And they go, yeah, I'd love that, because they can see it. If they can see it, then they write a check and get you started in it, right? And then you're off to the races. And so having a prototype, and then another example of this is a coffee machine company called Terra Cafe. It's doing exceptionally well. He came to me and wanted money. And my principal at the time said, Pano, this product is available on Alibaba. I said, okay. She said, there's no proprietary nature to this. I said, well, if he can get the exclusive North American rights, he has a small moat. And then if he generates enough business out of this third-party product, he can ultimately build his own moat by building his own machine. And then it's entirely proprietary. And that's exactly what he did. And he's done, using a third-party product that you could buy on Alibaba, he did over 12 million in sales, all e-commerce, no stores, by using a third-party product. They wrapped around it his name and boxing. And he's got celebrities using it. He's been very successful. Now he's come out with his own product, the version 2, which is really his product. So sometimes you have to crawl, walk, run to this. And you can skinny the amount of products you build to just get some early traction and then go big. But what usually happens is entrepreneurs overbuild their product before they actually have customer demand for it. And they wait too long to get to market with something to figure out whether the customer wants it. And so my whole attitude is do the least amount of product development you can to get an initial traction in the market. And sometimes you can't. You have to actually build this thing. That's fine. But pre-orders, any way you can get customers to buy into your concept and vision before you actually have to pay bills is going to use their money. Don't use your own.
Can I just add something to your comments?
Sure.
As a marketing guy, right? So no offense was taken at all. I will say that from the CEOs who I've worked with over the years, when they are out there, knocking on doors and busting down doors to get their message across, those are the ones that are successful. The ones who just say, oh, let's hire an agency to run Facebook ads or Google ads are usually the ones that are going to fail, because they need to be the face and the voice of the company. I've seen it. A guy like myself can help, through the process, but yes, the CEO has to advocate 100%.
Yeah, you're the evangelist at the end of the day. And that the CEO has got to be the one. They've got the vision, the mission. It's also why it's really hard to incubate companies and bring a CEO in. It's really, really hard because usually the vision is some other person or group. And then you're asking a CEO to come in and own that vision. It's usually not completely symmetrical. It's why incubation has been a disaster for the most part. Very few success stories.
On a funny note, I was so demoralized. I actually did the old-fashioned thing, went out to 6 companies a day, just knocking on doors and increased sales. So you know what? And it was just really, and then that was uplifting. So it definitely is putting yourself out there, outside of the screen, which can get scary at times again, because you become so comfortable with the screen, and then we had to get comfortable with Zoom. And now it's like old-fashioned knocking on doors really helps.
You also test your messaging. So if you're really open-minded, as you test your messaging, you get different reactions. And then your mind automatically, it's like AI, it learns what's the better message to communicate. So there's nothing like first-party interactions. Absolutely to your point. So one of the most successful brands that we've invested in was a company called Billy. It's a dollar-shaped club for women's razors, very successful. And they had nothing. They had literally a PowerPoint when they showed up, and like we gave them $100,000 or whatever it was. And within 2 weeks, the only founder who had any startup experience quit. So now I've got 2 founders, no startup experience, and I'm thinking, oh, and everyone wrote this company off. But they took their approach was, we don't have any money, we got to make it really stretch. So they did things like prototyping, and then going out and with my coaching, they went out to Union Square in the open area on 14th Street with a card table, and they did it at Parsons as well. And they laid out 3D prototypes of their razors with different shapes. And they stepped back and they said, which one, we're doing a test right now. Which shape do you like? And people would hold it and feel it and say, this one, or this one, or this one. And within, again, a sample size of 150 people, there's a lot of people walking through Union Square. You can get a lot of data really quickly. Within a couple of days, they knew exactly the form factor, which razor form to go build. Even though it was a prototype, it wasn't the real razor. There were no shaving capabilities. It was just the form, the handle. Then I said, okay, so you got that. Now, how do you decide what colors to produce? And they go, I got it. And so they literally went back out with those prototypes with 5 different colors. And they had an idea what they thought the color should be. The answer was not what they thought it was. They were very, I wouldn't call them feminist, but they were very women's power oriented. This is right before the Me Too movement. So they were feeling like women are getting the shaft, and they also learned that women were paying 10% more than men for the same products. This is the whole Me Too, the tax and so forth. So they were very angry, not angry, but they were just like, we're not doing pink. Guess which color was the most popular color by far? Pink. And gray was second. And so you just have to step back and say, it's not about me. It's about you, the consumer. Let the consumer speak. Test against it, prototype as much as possible before you build a product, because they'll give you feedback if you go looking for it. And that's the thing that we find time and time again, consumer brand companies don't do enough of that. Now, the counter argument is, and I do this all the time, Henry Ford, do you know his classic story about a horse? Who wants to recount the story for everyone? John, you're nodding your head. Go ahead.
I used to know it too.
So Henry Ford's argument against people who said the car will never work is, you ask people what they want a faster horse.
Correct. Right, because people can't anticipate the future. They are dealing with the here and now. So if you don't put the here and now in front of them, as in prototypes or samples or whatever, and by the way, Luna, the Luna bar has a story, how I made this. Great story that she literally would bake these bars in her kitchen and go to the local Whole Foods and have a card table and sell them. Whole Foods was fine with it. They were super keen to support her. And she literally spent 2 years revising her recipe before she finally figured it out and said, this is the one. That's a long time. That's a huge commitment of time to use customer feedback before you actually release a product. So I'm not saying it has to be that hard anymore, but it is not trivial amount of time to get real customer feedback. And Henry Ford, unfortunately, had to build the car before anyone could drive it and see what it was like. And sometimes that's the issue with hardware is there is no like intermediary step. There's no prototype. You can't build a, well, you can build a prototype car, it probably won't work. But that's the challenge in this industry. So anyway, thanks, John. That you nailed it.
Yeah. So on that note, hi, I'm Andrea. So the question of when do you know to change and go for that, not moonshot, but when you can change consumer behavior versus going along with an incremental improvement on something?
I have a very strong opinion on this. How much capital do you have? It's inversely related to how much consumer behavior you need to change. So the more consumer behavior you need, it's associated. It's just going to cost you that much more.
Agreed, but I think it depends on the industry, right? SaaS, at one point you could scale that readily without a ton of capital. Nonetheless, it changed. I mean, I don't know. I think it's specific to each industry, especially biotech. It's super capital intensive, and I've always wondered why it had to be that way. I'm curious, especially because you've gotten into health tech as well.
Oh, biotech is very clear. You need FDA approval, and FDA approval requires clinicals, and clinicals are expensive, and you don't have control over the clinical. They have to be approved by the FDA, and you have to get through the tests to prove that your product works. And a lot of clinicals fail at the level 2 trials or level 3. So you're absolutely right, but that's more a government regulation as opposed to being able to spin up a new product. Now, whether it works or not is a second issue. I will take exception, however, to there. Someone mentioned Apple below, right? So do you know what Steve Jobs' first new product as an Apple company was? It was an iPod. An iPod already existed. There are tons of them out there. Do you all I mean, some of you are old enough like me to have those previous products. And Jobs simply built a better iPod. He didn't build the, yeah.
Well, I heard he took the idea that somebody else had for 99 cents a song and then incorporated into it. So he made it.
Yeah, exactly.
Right.
But he simplified everything.
Right.
You see, in the old days, you'd have to take the CD, you'd have to rip it yourself with software that was completely arcane. I used it all. I ripped my entire catalog, rip it into streaming, and then you'd have to basically store it on a device and then run that device against it. And there wasn't an iPod. You could do it on a, I can't remember the little devices, but they only handled like 40 meg. And so you couldn't put much on there at all. So your point is, you're absolutely right. But Jobs' first new product was actually a better mousetrap. It wasn't a new product. And even the phone was not new, because what predated his phone? The Palm Pilot. Palm Pilot was there. You could do email, you could do notepads, you didn't have an app store, but you could do a lot with that phone. And again, what he innovated on was he even failed when he tried to completely change an industry. The Apple II, the Lisa was a disaster. Like there's a lot. Apple II worked great. Lisa did not. Macintosh was great, but it actually was a failure when you really consider what happened to that company until he rebirthed it. And it was really the iPod that gave him, and the MacBook. He did some things, but he never really. Even the Apple Watch. Okay, it's a watch, and if you notice when he came out with the original Apple icons on your phone. Well, look at your phone for a second. That icon, you can see my picture here, is a phone. That's silly. It's completely silly. But he understood that you had to have isomorphism. You had to have a way for a consumer, a human being, to relate to an antecedent or precedent, sorry. Right? And the precedent was a phone. Oh, I understand this. I know what to hit. Right? So you'd be surprised at how much of technology we own today is literally iterative, as opposed to truly, and I say truly, unique and unimaginable.
Well, he did,
and he stole a lot from Park.
Yeah, he did go the other way with the iPad, which everybody said would fail.
Yeah, yes, I guess you're right. But the iPad really, its footprint is from the phone. if you think about it, right? The
Yeah.
iOS
It's
is the
just
same. So he just did
it's
a
just the
wider
form.
footprint.
Yeah, it's just the form.
Exactly.
Yeah, but I remember
So-
everybody was predicting huge failure, and it became one of the most successful products.
Very fair. Very fair. But look at this.
Yeah,
other-
that was their second try though. Like they had a tablet before the iPad, and that was a big failure.
Successful product doesn't mean successful product doesn't mean innovation though.
Right. Yeah. I think you'd be surprised to realize how much product out there that's successful is iterative, not innovative. Google was not innovative. It was iterative. They just came up with a better search engine by having search results based on an index that made sense. It was logical. It just said, what does everyone, associate around? And where are the links, the backlinks? So I think we find that there's just a lot of, we do not have to invent the future. The future will invent itself. We can iterate against it. And frankly, we don't have the capital in most cases to invent the future. I mean, look at autonomous driving, right? Everyone can see it. You can't get there. It's going to be a long time before we get there. And there's other reasons for it. It could be regulations, could be all kinds of things. But true autonomous driving, which is the future and everyone wants it, is still 5 to 10 years away, as an example.
Speaking about marketing, how do you all market to potential companies that you can invest in? What have you found is the best way to find new companies to invest in and attract them?
Yeah, so it's birds of a feather. So first of all, if you've invested in something and someone else is building something that's like that, something that you've invested in, it's been successful, they'll come to you and say, hey, you did Billy, so would you do Silly? I'm just making that up. So birds of a feather is a very easy way for an entrepreneur to say, you get my world, you understand what I'm doing, so I want to talk to you about it. The smart entrepreneurs. The not so smart entrepreneurs don't take the effort and time to research the venture market and figure out where there's interest and where there's not. Now, for example, having done a razor company, the likelihood of me doing another razor company is very small. So why I got a razor company calling me and saying, hey, would you do Billy 2? It was like, no, the razor market's a razor market. And we sold the company and we're very happy, but there's just not a lot more of those out there. Search engines are another good example, right? Like, really, are you going to build? Like, now, what Perplexity has done, and Google's chasing them hard, is they've built a much better results engine, not search, results, right? So when you type in something, the results are backlinked and researched properly and just better all the way around. Okay, now will they last? That's another question. So for us, we go out looking for things. We find that, and the most recent investment, I'll show you this screenshot. I love this idea. So, and there's a rationale behind my thinking on this. So this company called Encora Health, and that earring is actually a smart earring that picks up all your vital signs for a woman, including fertility, in the middle of the night. So fertility, one of the big challenges with fertility is you need to measure yourself like at 4 a.m. in the morning if you really want to track your cycles. And that's really hard to do. This actually does it. You sleep in it, no trouble. It's much more effective than the Oura Ring because it's actually sampling your blood. It's a post through your ear, as opposed to an Oura Ring, which is an external device that sits on your finger. And if you talk to most women, they're really unhappy with the Oura Ring, but they don't have a choice. There was no alternative. And so we look at this and say, it's jewelry. It's beautiful. You can change the stud out, so you can actually change the endpoint and use diamonds or pearls or whatever. And then on top of it, it's incredibly smart and gives you all this robust information. So to me, this is an iteration. You can call it an innovation in jewelry, but it's an iteration on the Oura Ring, which is people do care about their vital signs and their cycles and so forth. Now, here's a better way to capture that for women, not for men. Most don't have earrings. But for women who have pierced ears, and that's a lot of the women in this country, this is an easy way to track your vitals and look good at the same time and not wear that ugly looking ring. So
did they come to you, or did you seek them out? You heard about them?
Yes. So this one, so our network found them. They're in South Carolina, of all places. We started talking to them a year ago. They weren't really far along. We tracked them. We said, look, we really are interested in this, but we need to see a little more traction. And then we engaged them more deeply and closed the deal. But it came through a referral. So it was another entrepreneur who saw them at some conference in the middle of nowhere in South Carolina. No offense to anyone who lives there. I do have a house there, but it's not your hotbed of entrepreneurialism.
I'm from North Carolina, by the way.
Okay, there you go. So North Carolina is much more civilized than South Carolina still to this day. But anyway, I mean, I went to this research. I went to this, just aside, I went to this entrepreneurial conference that they had at University of South Carolina, and everyone was in a jacket and tie. And I'm like, what are you people doing? Like, I wasn't in a hoodie because I'm too old for that, but I was in basically, you know, a vest and just a shirt. And I'm like, what are you doing? Like, who wears a suit anymore? Right? It was that disconnected from reality. You would never show up in Silicon Valley or New York in a suit. No offense to you bankers, but you're allowed to, but for entrepreneurs, it's completely unacceptable. So anyway, so that's the kind of strange area it is. And, but that came to us because we had done other consumer brands. Like, so people understood that we like hardware. We're not afraid of hardware. We've got 2 or 3 hardware investments we've already made. This is the 3rd. We know how to run the playbook on hardware. We're not going to incubate hardware, but we can accelerate it. And if it really is a differentiated product and also fits our mandate, because over 50% of our companies are run by women out of the 140, it really makes, you know, for a great, you know, combinatorial result. So we go searching a lot, and sometimes we find they come to us. But the ones that come to us, by and large, if they're not referred to us, you know what that's like. It's a crapshoot. I probably get 15 or 20 emails a day right now requesting funding. Like, seriously, it's just, you know, we've got nothing in your sector, but you're asking for money. Just tells me you just hit an email blast and just sent out a bunch of emails, and it's not good look. It's just not a good look for an entrepreneur. You should be much more careful about your research and your contacts.
Hey, Pano, a question on that ear stud. Can that do VO2 max as well?
I don't know the answer to that. It should be able to. Let's see. This is what they're picking up today: cycle syncing, fertility, stress management, activity, and sleep. But I don't know the details. I can actually text the founder and find out. I would love VO2 max, right? Because VO2 max is hard to capture.
Yeah, and one of my clients is a educational university doing nurse education for aging individuals and age-related diseases. And VO2 max is a great indicator of mitochondrial health, which is also an indicator of premature, age-related disorders. Think 55 plus.
Yeah.
Cognitive, physical, etc. And we used to think the mitochondria just died and you were done, but you can actually build new mitochondria, and VO2 max is the only indicator that you're doing it. So
interesting.
They're looking for a technology partner.
Yeah. I take cold showers because supposedly that helps generate more mitochondria. I don't know if that's true or not.
Yeah, well, no, it does. Yeah, among other things. Yeah.
Right. I'll text the founder right now.
Thank you,
John. Exercise increases,
and any level of exercise. I used to think that you had to get into the orange zone. Not at all.
Right. Yeah. The more you learn, the more we realize we don't know much.
Absolutely.
That's true. Well, you know, I was looking at that earring, and you know, I don't drink, I admit it, but you know, I always see people getting pulled over for drunk driving and blah blah blah. And they have to go through all these programs. Wouldn't something like that be great for alcohol monitoring for people who are mad like that?
Yeah,
but I don't know if alcohol is measured differently because, like I said, I don't drink, so I don't know.
Gives you a little electric jolt when you're over the limit.
Yeah. No, they have to be monitored and get their blood checked.
You can do VO2. I just got a text back from the founder. They do VO2. Is one of the things that they pick up. Yeah.
Thank you.
Yeah. Because they're actually measuring the blood. They're actually interacting with the blood as opposed to, you know, pressure or light or whatever.
Are they interested in doing a trial? Because there's an IRB that's been put together.
Send it to us. They're actually in trials right now. They've got 2 trials running in the South with hospitals, major hospitals. And I met the physicians who are running those trials. They're usually the chief medical officers of these large hospitals, and they are over the moon about the product. So gave me more confidence. They compare it to an FDA regulated device. they compare it to an Oura ring and the actual Encora ring, Encora ear stud, and it's as accurate as the FDA regulated device. So
Which
they are
southern-
finding.
Sorry,
Go ahead.
which southern hospitals?
I don't have them off. It's one in Atlanta and one in Greenville, South Carolina. I can get you the names.
Fantastic, thank you.
Yeah, she's actually publishing. So the thing about her, so this gets back to founders. She is relatively naive about starting a company, but she's a biomechanical engineer, PhD. Plus, she was this is bizarre. I've never seen this combination. She was also a patent attorney.
Huh.
So she's patented this thing up the yin yang, so to speak, and she's been building the biomechanical piece of this for 2 years. So she's really right on the cusp, and we're super jazzed about it. If you want me, I can probably get the hospitals. I can text her right now.
That'd be wonderful. One of my clients is Vanderbilt.
Oh, wow. So she's actually going to publish the results. So her approach is she actually is going to publish the clinicals so that any obstetrician can find the research, the results, and validate or confirm that this thing works. So
Yep.
what'll happen is patients will see it. They'll talk to their obstetrician. What do you think? And they'll go online. They'll see the research and like, oh yeah, they got clinicals behind this.
Yep.
And deep. So she's doing it the right way. But she's going deep. For a while, she thought, oh, maybe I should have do B2B. And I'm like, what are you talking about? Go direct.
Yeah.
The Oura Ring is a great example of an ugly product that people want desperately to get better results. So yeah, I'll get you the answer to that very shortly.
Thank you. My client's about to publish their results because their intervention helped through my platform costs almost nothing and has amazing results for preventing age-related disorders and diseases.
I'd love to learn more for sure.
Thanks.
With it being an earring, and I mean, so many people, I don't mean this in any weird way, but have so many piercings, belly button piercings, I mean, I could see it expanding, for maybe someone who doesn't want it in their earring. Maybe they want it in their belly button. I mean, the opportunities are endless there.
Yeah, you do have to charge it every now and then. So the beauty of the earring is that you naturally change your earrings anyway. Whereas a belly button ring, you probably don't change very often, and maybe even painful to change. I have no idea what that's like. Or a nose ring, I can't imagine that one. But yes, you're right. So they could do more of those. I wouldn't be surprised if she's going.
So early on when you first started talking, you said that you weren't that smart. So my IQ must be below 80 because the information you've given today has really been incredible. Yeah, I've gotten so much out of it. One question I do have for you, though, do you ever do any kind of take a look without it even being part of the equation, is whether you invest in a product, but just taking a look at what somebody has just to give them some advice on how you think they might be able to make things better, but not like a commitment says, well, if you did this, we're going to invest you, just where we could say, here's what I think you could do better.
Well, here's an anecdote, a phrase that I stole from someone. I can't remember who I stole it from, but when you ask for money, you get advice. When you ask for advice, you get money. Meaning that when you go looking for advice, you open yourself up to great opportunities because you want to learn. And ironically, when you want to learn, people are more open to providing feedback. So I am very open to that. I got to be careful because I've still got to run a fund and team and so forth. So I can only do so much of that, which is why I'm happy to do this, because my PR person was like, no, but you're spending an hour and a half. You don't have an hour and a half. I'm like, yeah, but there's a lot of people on this call and Bonnie's great. And I know that Bonnie will bring a great crowd. So, and as I said, even one person could make a huge difference. So I will do it every now and then. If I don't think they understand the market. So the thing that I really have no patience for are entrepreneurs who don't understand the competitive landscape.
Yeah.
Yep.
That's just, I hate to use the word lazy, but there's nothing short of just plain lazy. And I don't have time for lazy people. I just don't. anyone who's earnest and hardworking and has really gutted out the market and is understand what the challenges are and has figured out that this is the competitive landscape and wants some help, great. Always happy to provide, 15, 20 minutes of feedback. I'm brutal. I'm going, like, we don't mince words. Like, we're polite and nice, but we're going to be honest about why this is going to be really hard. Doesn't mean you shouldn't do it, but why it's going to be really hard. So, for example, I don't invest at all in education anymore. I know there's some educational platforms out here. God bless you all. Selling to schools, public, private, doesn't matter what kind of school, universities, that's the worst experience. It's the only second worst one is retail, selling to retail executives, which I do. So it's just hard. It's really, really hard. So you have to have a mission and vision that you're going to be a nonprofit the rest of your life. And a couple will make money. Most of them will fail. I was a very early investor in both in virtual reality educational systems, classrooms, way before COVID. What a nightmare, just the bureaucracies and so forth. So you want to find swim lanes where you do not find a lot of regulatory challenges, right? You need to be in places where you're not going to run into buzzsaws all over the place that are not your own fault. It's fine if your own fault, you fix it. But legal changes or restrictions that are just don't make any sense, you just go, why am I dealing with this?
Well, constructive criticism is something that personally I've always loved. And Bonnie will tell you, I've been coming to these meetings for a long time. This is the first time that I've ever asked that question of someone who was presenting like yourself.
I'm happy to do it.
Your knowledge, your well-rounded knowledge of everything and expertise on it is really pretty incredible. That's why I ask this, because
I need you in front of my next LP meeting is what I need you to do. Just kidding.
Okay. Yeah. No, I'd be happy to.
I'm teasing. LPs only care about results. Yeah.
I am a part-time actor, so I'm actually pretending to be the CFO. I have nothing to do with the company. No, I do. We've been working on this for a long while. We, in the recent past year, we changed CEOs because the original CEO apparently wasn't getting it. And we did a little bit of reorganization, so we're coming hard and heavy. Our product has been used by a Magnet magazine, something they call Magnet Television, for years. But, any expertise in someone who's on the other side.
Let me give you 2 minutes, and then we can always talk offline. Video is a very, very tough business.
Yes.
Because there are only 2 or 3 outlets for video. Right. And YouTube controls the market. It's crazy how big they are. Any attempt at annotations or video creation always runs into a YouTube buzzsaw. And that is a beast. Video creation itself, because people now believe AI does everything. Why can't I just do this with AI? And I do think you're going to run into that with investors. They're going, that's the wrong trend line. I don't want to get in the middle of that AI buzzsaw. We talked about that earlier today, right? Which isn't AI going to do everything kind of thing, right? So you run into some of those examples where it's going to be harder and harder to differentiate, to convince people, not that you can't differentiate, but to convince people that 3 years out, this is not going to be all commoditized and generated literally through a prompt. And frankly, there's so much money going into making that a reality that it's you against the world, right? It's anyone trying to beat the, if you're a chat service right now and you want to live, you better figure out plan B, because all these chat capabilities are coming live and you've got to be really distinct and special. So it's just, that's the buzzsaw you got to be worried about, I would say, just in video in general.
We realize anybody can make movies and videos any way they want. The way that we want to do, there is, as our research is showing, that nobody is quite doing this yet. So we hope to be first to market, and then maybe someone who wants it. The best analogy I can give you is if you have a wedding and you got a videographer and they come, they're taking all these different videos, and then it goes back to the place and spends weeks editing it, doing the lighting and everything. We hope to be able to do that in very, very short time. And you go to a wedding's just the example people understand. Somebody could go to a wedding and you say, okay, everybody takes pictures of cut the cake, the dance, the mom dance. They're doing all this and upload it into the system. The system picks out depending on what you want it to do, the best edited shots and makes a professional quality video in an extremely short amount of time. And we don't want to replace the videographers, but we want to do, people around the world at Christmas time, everybody's taking videos of their Christmas stories. They upload it and you get a finished video. And, we hope to be able to have scenarios like colors or themes. Maybe you want to make one in a style of a certain director.
I think what you need to do, though, honestly, this is always feedback for anyone, is you've really got to test customer demand for this.
Yeah.
And what is the precedent for this? I personally don't think a lot of people spend time generating videos. Like, meaning they take videos. I mean, how many of us have a camera full of photos that aren't in any sort of archive system, right? Because you just don't have time. And so, the value of production, post-production, which is really what you're describing here, which is a post-production process, has limited value depending on where you're, if it's commercial, like it's going to be a movie, of course, post-production makes a huge difference. Music, everything has a huge impact.
Yeah.
So I don't want to take up too much time. And I got to jump at 11. So I got 10 more minutes, and I apologize if I'm brusque. I'm not trying to be.
No. I appreciate everything.
Yeah, this has been fantastic. And of course, we will be respectful of your time. Next question or comment.
Pano, if you want a great quote for education in the educational industry, which is I totally agree, and I'm in that space, but I'm not really in that space. Did a project for the Gates Foundation focused on building and assessing 21st century schools and the Microsoft Partners in Learning thing, and we quoted a educational professor, big brain, who said, educational leadership is an oxymoron. And the educational reform takes a generation because the dinosaurs have to die.
Yeah.
Yeah, it's true. By the way, it's Prisma Health who's running the clinicals.
Thank you.
Yep.
I don't know if you want to share your contact information, Pano, but I'm happy to put the people.
Oh yeah, let me. Okay. I can put that in the Zoom. Yeah, it's no problem. Happy to do that. Keep going. I can chat and chew gum at the same time sometimes.
And I always ask first.
No, of course.
A quick question, Pano. I think you said before that you believe there's a lot of unprofessionalism in the venture capital sector. Maybe I got that wrong, but do you see some specific problems in the way venture capital works right now?
Oh, it's incredibly broken. I mean, it's incredibly broken. And by the way, sorry to the banker who's in the call as well. And investment banking is incredibly broken as well. The whole model is a form of flipping the company to the next buyer, whether it's startup to seed to Series A to Series B to Series C. It's always predicated on flipping it to the next entity. And Bill Gurley has a great blog post out there on its game of musical chairs. The key thing is you don't want to be the last one standing, holding the bag, so to speak, holding the company that is basically not worth nearly what you paid for. And the challenge is, for example, 65% of all corporate M&A destroys value, destroys it, not destroys value. And this has been documented by Harvard Law School, McKinsey, BCG, everyone. But yet we still do corporate M&A because that's the way you, quote unquote, are supposed to grow your company. Most of it's failing. You talk to a single CFO, they all agree, yes, it fails. Like, why do you keep doing it? Well, there's no alternative, right? So the classic problem we have right now with venture is that we're really not value-added investors. We're value-added flippers. We flip them to the next entity. AI right now is not a fair, AI investing is not a fair playing field. 5% of the venture funds are getting 100% of the looks. And you either play that, you chase and try to play into that game, or you just play differently, and we play differently. Right. But and LPs are of two minds. Some are we want the flipper. We don't care what it's producing, just as long as it produces returns. And then you have the ones that say, no, I'm really mission driven. I've got values. I care about where my money's going, and I don't need to do things that are really not going to be helpful to the planet, for example. So
right. Yeah, thanks. Yeah. I mean, there was a really good piece about Sam Altman in the Wall Street Journal.
Yes.
Earlier this week, talking about some of the mechanics that he's got going on behind the scenes.
You know what that is? Elon Musk has got the same problem. This is the classic problem of human behavior. Absolute power corrupts absolutely. To bastardize a phrase. And these guys have absolute power. And they just don't have any guardrails or governors on them at all. And so they really believe that, like, no offense to Trump, but the reality is he can say anything he wants and he will have a lot of people believing him. He could say the world is flat and he would have a huge number of people believing that the world must be flat because Trump has said it.
Right.
So the fact of the matter is that these people believe in themselves to the point that it's distorted. It's like, what did Jobs called it? Distortion reality?
Reality distortion, yeah.
Reality distortion. He just completely argues that whatever reality is, no, I have a different view of reality and I'm going to tell you what it is and you're going to believe it. So there's a lot of that going on, and that's going to be Sam Altman. He's drinking from the same fire hose that Musk drank from, Larry Ellison drank from. Larry Ellison said cloud computing is snake oil, you know. But
right.
So you just get these kind of crazy statements people make, and then they're not held accountable for them. Anyway, I could go on. Don't get me started.
I agree with a lot of what you said, Pano. Question for you though, with the kind of holding of the business till it gets to, maturity, or wherever you want to take it to, how do you return money back to your LPs? Or is it through dividends? Or are you thinking IPO?
No, you sell earlier. No, see, what you do is you cut out most of the middle market fluff in these ratchets that go on, and what we're doing is we're cooperating with the corporates to help them buy earlier, a lot earlier, without investment banking, without all of the albatross stuff, the stuff that sits on them. And it's more like the minor league farm system for Major League Baseball and building a real flat, as opposed to everything being free agents. You guys are on the free agent game. You are like Scott Boras, the agents who want the highest price possible, and you got a bidding war going and everyone's bidding for Ohtani if you follow baseball at all. And so his price just goes through the roof. It's great. And free agents are a wonderful piece of the business, and some of them really make a difference. But everyone has proven if you don't have rookies, if you don't have smaller entities with lower capital needs and, more importantly, salaries, you don't have a winning baseball team. It's been proven time and time again. So the combination is important, and we don't have that right now. Everyone's pushing for free agency. Everyone hopes that their startup becomes a free agent and generates $1 billion exit because they've got funds that require that. So that you can't touch. If you have a $5 billion fund, you can only look at companies that are going to give you a $5 billion return. Think about it. That's a crazy step function from where these startups start. And so you're only shooting for the moon, which causes a lot of failure in the process. And then you got these corporates who are trying to buy at the same time and grow, and the prices are out of sight. And it's one of the reasons why corporate M&A is stalled, is because prices are not in line with reality for most of these corporates who can afford 3 or 4 times revenue, not 20. That's why we avoid VCs. Yeah, no, I hear you. And strategic investors, although strategic investors have their own issues, which is they're not really focused on the care and feeding of the startup. Yeah. They're very detached from the day-to-day. They don't have time. They're not professional. In most cases, they're not professional operators. There's just so many issues with CVCs and corporate venture. But every now and then you find a strategic that really has an interest in your product and wants to buy you and basically gives you a time horizon to get there and works with you on it. That's fine.
My favorite acquirer. Really interesting everything you've been saying today. Thank you.
Well, no problem.
This was fantastic, and I want to be sensitive about your time.
Yes.
Unless there's one more question, if there's, the whole thing has been sage words of advice, but any parting sage advice you'd like to share?
Yeah.
Oh, Andrew, you have
also, what do you mean by multi-strategy? If you can incorporate that into your last bit, that'd be great.
Yeah,
Thanks.
so it's a term that LPs like to hear. So it's multi-strat, meaning we do really early pre-seed, we do follow-on investing in tech and pre-seed, and then we also have this brand fund, which does consumer brands as an entirely separate fund and fund structure. So that's what you call multi-strategy, is you're not just a pre-seed fund or a follow-on fund, you're doing both and both tech. And we believe consumer brands needs to follow a very different investing rhythm than technology companies, which is why venture has mostly walked away from consumer brands. If you follow them, the consumer brand investing has dropped 97% in 5 years. That's a lot. That's almost zero.
I think that's a great model, because a lot of times you just go for, and someone says, no, you're too early, you're too late, you're not there, and you got to try to find the match. And it's just so hard sometimes to find the right match.
Oh, I agree. Yeah, so Bonnie, I've got to run, but
I
this has
know.
been great for all of you. Thank you for joining
This was
and being
fantastic.
here to listen to my stupid railings and,
Oh, this was
comments.
wonderful. Oh my God, you haven't seen the comments I've been getting. Thank you so much, Pano, and
Thank
My
you.
pleasure.
Thank you.
Don't send your contact information to me. I'm fine to try to engage some level. And if I've said I really would like to see this, I think the doctor in the room, the supplement is a great interest to us, and all your companies are interesting. I'll try to be helpful wherever I can.
Great.
Thank you
Thanks.
so much.
Great,
Thanks,
everyone.
Thank you all.